The U.S. Federal Reserve, the country's central banking system, might announce its policy review soon, a major aspect of which would be keeping interest rates low for years to come while trying to increase inflation and employment numbers. This strategy would be bullish for alternative asset classes, Bitcoin BTC, including, according to analysts. The goal, according to the recent statements by the Fed officials and analysts cited by CNBC, is to move to average inflation, targeting, in which inflation above the central bank's usual 2% target would be tolerated and even desired. Therefore, they would pledge not to raise interest rates until they hit both the inflation and employment targets. There is one major problem though, wrote Anthony Pompliano, co-founder of Morgan Creek Digital. The Federal Reserve has been horrible at hitting their targets in the past. Pompliano argued that the worst scenario would be the Fed overshooting the inflation target and not be able to increase rates quickly. They would be accelerating inflation at the exact moment that they should be reining it in. My anticipation is that real estate, gold, Bitcoin and stocks are all going to run much, much higher than they already have. Bitcoin is going to be the largest winner out of all assets since it is the most volatile. Opening square bracket ... closing square bracket. Just don't get caught holding cash while the Federal Reserve is systematically devaluing the asset under the guise of creating economic activity, he said. Similarly, Jameson Lopp, chief technology officer of US-based crypto security specialist Casa, tweeted, "The Fed is expected to make a major commitment to devaluing your money. Whatcha gonna do about it?" Learn more, Fiat money printer, goes BRRR, is it a time to sell all cash for Bitcoin? Ed Yardeni of sell-side consulting firm Yardeni, told CNBC that the Fed publicly would welcome inflation in a range of 2% up to 4% as a long overdue offset to inflation running below 2% for so long in the past, and this, he said, would be wildly bullish for alternative asset classes, such as stocks, as well as precious metals. Furthermore, Peter Boockvar, chief investment officer at Bleakley Advisory Group, was also quoted by CNBC as saying that rising inflation at a time of historically high unemployment doesn't make any economic sense whatsoever. Meanwhile, Mati Greenspan, founder of Quantum Economics, stated that Bitcoin and the crypto markets are once again no longer correlated with the traditional markets. The number one factor that moves prices is the Federal Reserve, and their propensity to print, Greenspan continued, and when they print, the prices in all markets go up. But to reduce the risk to their assets, portfolio managers diversify their holdings with different asset classes.